Good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for January 11th, 2023. A few seconds of silence for the passing of guitar legend Jeff Beck, the original Yardbird. Boy. So that's what I will be listening to tonight. All right, we'll start tonight with the sniper trade of the day. And we had a gap up. So we're on a 3-minute chart. And we're looking at Frog Champion Mexico, EWW. So the blue box is our opening range 3. The second bar takes out the high of the opening range 3. So we put our standard risk box in. And we are on the long side. Check or hold. We get about 5 bars into that thing, and it is already, right from the get-go, well underway. And so we can just get our risk out. And lock in that gain for no lose plus dinner for 2. Now, if this is the low of the day quiz, how high would we project? What would we call the maximum reasonable intraday move? How would we find that? Yeah, if this is the MMRB, which I happen to be using as a 1/10 of the range stat. Really the right answer on this, because we're not always, and you may not always be using 1/10 of the range stat as your MMRB. So the real answer on this is you find the low of the day, and then you add a range stat, which is the average range of the last 30 days plus 1 standard deviation. And that works out to be the maximum reasonable intraday move. Well, why is that? Because the range stat, or the R stat as we call it, it looks back 30 days, and 85% of the previous days, the previous 30 days ranges did not exceed the range stat. Average plus 1 SD. So that means only 1 time out of 6 in that whole 30-day look back did it ever move larger than, from the low of the day to the high, larger than a range stat. Which means that you're not entitled to believe that today's move is going to be one of those 15 percenters, that 1 out of 6 that exceeded the range stat. So if it actually goes from the low of the day to the high of the day and equals a range stat, then that's going to be a reasonable move, but the maximum reasonable intraday move. So you would simply take this low of the day, add a range stat, and then that would be your upward move. So meanwhile, somewhere in here we've got to have that locked in. And then you can decide where you want to put your stop to lock in more. You might be at a 1 day low, or 1 bar low, 2 bar low. The bottom of this little consolidation, you might just say, let me take a that MMRB and just hang it off the top, that would be about the 2-bar low. So you could pick any of those that you wish. So I'm just going to put mine right there. Let's say the bottom skin of the dragon. Your call. So now we notice that we get a bit of an orderly retracement to the edge of the dragon. The PSAR is still holding firm. The R10 makes that little low and then resumes, and then it takes out the peak of the R10 here. What would we call that pattern? Emerging dragon. He's emerging out of the waves. If we had entered in this little zone inside here, where that yellow space is, what would we call that space between the peak of the R10 and the belly of the R10? What would we call that space inside here? We would call that a pocket, because it's a quiet space before the breakout has occurred, and it already rejected the failure. So there's this little bit of uncertainty going on in here. That little space inside there is called the pocket. And you could make a decision to enter inside here as a pocket entry, which front runs a breakout of the R10. Or you could wait for the emerging dragon, where you get a little bit more confirmation. And the difference would be that much. If this thing works, then you will say, well, of course I should take the pocket. I like taking the pocket entry most of the time because it already had a chance to fail, and it didn't, and the dragon is still up, and as soon as it breaks above this peak of the RL10, it should really go. So I feel like I can get a better fill inside the pocket, and I'm usually willing to go ahead and take that shot. And then if it does fail, so if I entered here and then it does fail, I end up losing less than if I had entered here and it failed. On the same position size, it just take half the loss. So in my view, that pocket entry is pretty good. But I didn't take it this time. I ended up getting about... So 2R battle drill would be somewhere around the pocket too. I was a little late on the entry. Span of control. So we're in. So now my job is if I see price right here, I probably have my stop right about here. I'm not even offended if you decide just to bring this up here so that the second entry is in the money. You might also put it right at the edge of the RL10 with the reasoning that if this thing is really going to work, if this whole pattern of the emergent dragon is going to go, then what was once resistance should now be support. And then if price were to go below that, then you'd want to be out. So you could make a technical argument that you could put your stop right there. So those are choices that you get to make. No matter what you did, it was a good. Now I'm noticing we have... So this was our first R10 rollover and cross the baby. So the baby dragon is that little purple line. That's a 3-period SMA of the RL10. So it's whenever that RL10 is just running up, there's always going to be that little gap as that simple moving average is trailing it. When we get that first rollover, here's the first test, which led to this little sell-off channel. We can then think of that first move as the first leg. Then it holds here. And this emerging dragon pattern we would also think of as a kata 2 because we are buying on a higher low after the confirmation of a good first leg, and this feels like a continuation pattern. Now here's the second test. Now notice that the size of leg 2 is a little bit, that's leg 2. Leg 2 is a little bit shorter than leg 1, so there's not quite as much steam in the engine. And you'll notice that because of this little sell-off in here, that our MACD histogram went from the strong up down to the 0 line, and it's going to flirt around the 0 line. So this is measurably weaker. Now, why does that matter? Because even if you didn't get the first one and you just took the second one, you see 1, you plan for 2, and you hope for 3. I mean, I'd like to see this continue to go. But because that leg is smaller, I'm tempted to just say I've had my day in court. I feel pretty good. We've got 1, 2, 3, 3.5 R on the first position and 1 R on the second position. So we're at about 4.5 already at this point, and it's resting right on the PSAR. So you would not be wrong to just go ahead and take that now. Instead of waiting for the R10 to continue to fail and where it hits the PSAR, so in about 1 or 2 bars, if this doesn't go in 1 or 2 bars, we should be out of that position. So you might just say, well, just let me go ahead and take it now. Nothing wrong with that. Yeah, I just want you to notice that as soon as you start getting that first little piece of weakness, notice how quickly that has an impact on the MACD histogram. So if anybody else is out there in that trade, and if they're using oscillators, because mathematics, you're always going to see that weakness, and that may be enough if they're trading off indicators to make them want to get out sooner. By the time you get the second piece of weakness, now you have really introduced weakness into the MACD, and then notice that we're already in the winter. So my point is that would not be a bad exit right there. Check or hold? And I just go ahead and take that for about 4.5. Now, as I'm visually framing this, if this consolidation zone were to fail, my targets would be something like here. I think it could get to that level. Now, then my question would be, is that going to act as support like it did last time, or is it going to fail? If it fails through there, I would not be surprised to see it come all the way down, all the way back to the 0 line. All right, so there's 2 legs of a tactical trade to the downside. How would I determine how much is available to the upside? Again, I'd come to the low of the day and post up a plus range stat, and then I get some kind of upper price limit somewhere up in here, which works out to be 10 of those boxes, 2, 3, 4, 5, 6. So we're only about 1, 2, 3, 4. We're only about 40% of the range stats so far on this move. So we could see another move of that magnitude to the upside, and we're still within the range of reasonable normal intraday. Check or hold? It's not a bad idea when you're setting up your charts ahead of time and you already know what the size of the R10 is, to go ahead and put a box on here with your range stats so that you can quickly drop that template on there and see what your reasonable ranges are for the day. All right, so what we notice is This led to a kata 2. Now the belly of the RL10 also holds at a higher level, and it crosses back above the dragon, takes out the PSAR, so we're ready to make that trade. We drop the same standard risk box on there. What pattern would we call that? Well, that's what Mike, that's what I mean by framing. So, but what I'm doing in this little demonstration of support and resistance and range stat is we're constructing a price frame, price ladders that allow us to begin to visualize where this trade can go in a routine way, the same way a carpenter uses frames and structures to control his craftsmanship. What we're doing is framing. Okay, so we've got this. This is we'd call that a K2. It's already so close to the peak of the RL10 that as soon as it gets above here, this thing could be free and clear. So that could really go. By the time it's about 5 or 7 bars in, we got to get our stop to here and lock in our gain on this next wave. Now, we're on a 3-minute chart, so on the 3-minute chart we see this as leg 1 and leg 2. But if somebody was trading 5-minute or 10-minute legs, this whole pattern from here to here might just be leg 1. And then they might be looking at this as leg 2. And now we're already seeing that next little phase move, that next little move to the upside. Okay? So if you were in this position, you could put a stop 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. 5 would be a 1-bar low. 4 would be the upper skin of the dragon, spine of the dragon, lower skin of the dragon, the PSAR, and this a 1R box is probably right around 1 as well. So just where would you put your stop? 1, 2, 3, 4, or 5? Any one of them is going to guarantee a winning trade. So I see a vote for 3. Spine of the dragon, which is approximately also a 2-bar low. That looks pretty good too. A trailing 1R stop ain't bad either. If you picked 1, 2, or 3, you're still in the trade. If you picked 4, you cashed a 1R win. If you exited at 4 or 5, then you would still want to take that re-entry here where I took my second entry. And the reason being is that there's still 4 risk boxes, 4 MMRBs to the upside, because now we're about 60% of an R-stat, which means we still have 4 more boxes of R10 to the upside. And if we're risking 1, and if we're going to give back 1, we still have 2 units of reward of reasonably available, and that's our 2-to-1 reward to risk ratio. I had my stop at 3, so now I've got just about 2R in hand and money in the bank from the first series. So the second entry is again slightly above the peak of the RL10. So what would we call that pattern? Emerging dragon. Yep. By this far into the trade, we're about another 5 bars into the trade. And if our entry was here, I want to make sure that I get my stop, which was probably there or here. I want to get that up into here so that I can lock in. I want to lock in that little wedge. But notice how quickly this is already starting to roll over. The size of the previous leg was about the size of this leg. Neither one was as large as this leg. This is already starting to roll over after half a leg up, so I feel like I want to get my stop to here now. Okay. And exit shortly thereafter. Excuse me. And closes out to the rest of the day. Excuse me. There was an opportunity if you'd been sticking around, for a Z3P collapsing dragon, but this was such a good move, and it's already after 3 p.m. that I don't monkey around with it. I'm very content to have made that trade. This is typical behavior of EWW, which is the Exchange Traded Fund for Mexico, which is a frog champion, meaning that it makes intraday directional moves in a very orderly fashion, is very liquid, and is quite often non-correlated or least correlated to the S&P or to Europe. So this can often make directional moves when the larger indexes are choppy. Another trade from today was a core and turbo trade in IWR, so I got a swing trade on this one, which I'm going to review in a second. And this one had a gap up. It broke above the OR3, and because I already had a swing trade kind of in the money, I took a relaxed trade to the upside, recognizing this was my risk box. Added a second position at about 3R, very relaxed, and then picked a time after 3 p.m. to get an orderly exit. So this whole gain on two intraday positions simply raises money that goes towards lowering the cost basis on my swing trade. So IWR, I was already long and had an upward bias, and just kind of oozing back into that one to take advantage of the short-term trend. So that would be core and turbo.